Sorry, I was muted there. Welcome everyone to the Daily Macro Update for Tuesday, October 21st. As the title of this video says, the narrative that's out there is Bitcoin about to take over gold's bull run? Got a lot of chatter going on places like X and other different sites talking about how, Bitcoin just had a pretty large acceleration here. And these are the types of charts that you actually see, right? They zoom in on the 1 hour. But what I like to do is zoom out a little bit. Let's get a better perspective on what Bitcoin has been doing over the past several months. And so one of the best charts that I've been looking at in terms of Bitcoin, with Bitcoin being something that is highly sensitive to inflation as well as liquidity, are these two charts right here. And we'll go ahead and bring up both of them along with, Bitcoin. So the first one, what we'll do is let's head over to the chart of net central bank liquidity. And then also let's go ahead and add this one. Let me see if I can find it here and do it. This is the 5-year break-even inflation rate. Let me make that a different color. Let's do red for inflation. And then finally, we'll bring up Bitcoin here. And we'll make Bitcoin orange as the appropriate color. All right, now, as you can see with this chart here, I mean, you can kind of see how a lot of these things are correlated here with Bitcoin's price, right? And so again, the blue is net central bank liquidity, the red is inflation, and the orange is Bitcoin's price. And so, yeah, as you can see, that they're pretty much correlated here in a positive way, not like 100%, but just looking at the past couple months here, we've seen that both 5-year inflation expectations as well as the net central bank liquidity levels have been decelerating here. Now, at the same time, when you take a look at Bitcoin, you can see that, it kind of is tracking along the same way. And so, if liquidity as well as inflation continue lower, then those are two both huge headwinds for the price of Bitcoin itself, right? Taking a look at also as well the Bitcoin to gold ratio, we are seeing a pretty decent spike here today, but as you can see over the past several months, Bitcoin continues to be in a bearish trend versus gold. So, for the people that are out there saying that this is 100% the start of the next Bitcoin bull run and all the money is leaving gold and heading into Bitcoin, that could be true, but it's way early to tell right now. And just from looking at the current trends, I would not be jumping on board with that narrative at the time being. So, yeah, there are other things to look at than just gold, even though it is true that gold and Bitcoin currently have a negative correlation between each other. And so, that means gold up, Bitcoin down, gold up. That could change, right? Correlations always change, but that's kind of what we're seeing currently. But yeah, so those are some of my thoughts with that narrative. And again, it could be true, but at this point in time, it's just hopium at this point. And you need more time to essentially confirm that. So yeah, always appreciate the enthusiasm surrounding Bitcoin. And I do think, and my team and I think, that Bitcoin over the next 10 years is probably going to do very well, right? Because the central banks and government are obsessed with devaluing their debt by debasing the reserve currency, which is the dollar, in order to inflate their debt away. It's nothing new. They've been doing this since ancient Rome, with the what is it, the silver denarius, forget what it's called. Shame on me, it's in the Bible. um but this isn't a new concept with human civilization, with fiat currencies being debased. So yeah, I think Bitcoin and gold will continue to do well together, but when you zoom in super short term, you're going to see times when they are oppositely correlated, but for the most part, I mean, they pretty much work as an inflation hedge. But yeah, so um at some point, I'm sure we will see a bullish breakout for Bitcoin, but for the time being, with the probabilities, as well as with the current state with which we're seeing inflation come down, with decelerating central bank liquidity, I want to see Bitcoin prove itself a little bit more before I can jump on that narrative. All right, so that's that with that. One other thing that I like to look at, and we're going over these because there isn't any macro data for today, kind of just going over some things that I found on Twitter that were good content for me to, give my take on it. And so another thing was this narrative floating around, and I'll post a video about this too. But here's the narrative. There's a ton of money in money market funds, and once they start cutting interest rates, trillions of dollars is going to go right from those money market funds directly into stocks and cryptocurrencies. Now, it is an interesting thesis, and it's right that there is trillions of dollars, over $7.5 trillion that's stored up in money market funds. But the problem is that this is not money reserved for, injecting into risk on assets, right? This is insurance policy money for when, things start to, crack in the economy and we actually start to get some deleveraging in the credit markets. All those corporations that have money in these money market funds, guess what they're going to do with that? They're not going to rush to buy stocks because those are in free fall. Typically when this happens, what they're going to do is cover their debt obligations, right? So they take a lot of that money and they're, paying off redemptions, margin calls, debt payments, all those things they're trying to get rid of as this deleveraging event happens, right? And so you just got to be careful again with what you see on Twitter and X with, narratives like this that, trillions of dollars from money market funds are on the sidelines ready to go. That's just not true. So, and I think this has more room to grow, right? Because if you take a look at the percentage change from 1 year ago, you can see how, this isn't yet peaked at the same levels that we saw back during the 2020 pandemic, the 2008 great financial crisis, or the dot-com bubble, right? So, I mean, it almost got there all the way back in Q4 of 2023, which, some might say that that's actually when another recession started. But for the aggregate economy, this could have some more upside here potentially, for this kind of like no landing scenario to keep going. You have to remember that after this pandemic, after 2020, this is uncharted territory. And I know some of you have heard me say this in the past, but just for perspective, from the year 1913, when the Federal Reserve was created, all the way up until the pandemic, it took them over 100 years to essentially develop over $4 trillion on their balance sheet, right? Over 100 years to get to 4 trillion. And then in a single month, March of 2020, they went from a $4 trillion balance sheet and doubled 100 years of damage in a single month. They doubled their balance sheet from 4 trillion to 8 trillion. So first 100 years, 4 trillion, 1 month, 8 trillion. That type of damage, that type of insane money printing is something that's going to take multiple decades, probably for the rest of my lifetime, children's lifetime, grandchildren's lifetime to reconcile, right? I really feel like people just don't have a grasp of like how insane the money printing was during the pandemic. Like it's out of control. And so, a lot of people are like, why hasn't a recession happened yet? I guess, the macro isn't macroing. It's like, are you serious? We're still feeling the immediate effects of the doubling of the Fed's balance sheet, 100 years of damage in 1 month. Of course, there's going to be a huge bubble, right? So, anyways, that's what I'm looking at here. Somebody said the gold sell-off looks like it's on high volume. Yeah, I think there was a volume spike on that. We can go to a chart of GLD, which is the preferred ETF that my team and I like to use when having paper exposure to gold. Yeah, I mean, you have seen a pretty decent large acceleration on here. This went right down to the low end of the trading range in our model. So, I mean, I was actually buying a little bit here just because I was just following my rules. Gold still remains in a bullish trend, and it's right at the low end of the trading range. I would prefer to see it on lower volume, but I didn't, and so I just bought a little bit. We'll see what happens. If it keeps going down lower tomorrow, I'll probably buy some more too. It's going to take a little bit to get this thing to bearish trend. So, we'll see what happens. But the one thing I know is that Bitcoin remains in bearish trend. Gold remains in bullish trend. So, if I saw today that gold went from bullish to neutral and Bitcoin went from bearish to neutral, right? So two opposite rate of changes, but both are going to neutral trend. That would tell me something a lot more different. But even with this move, gold remains bullish and Bitcoin remains bearish. Now that could change again. We'll have to see what happens. But I am not convinced just yet that we're having this huge Bitcoin is getting all the money and liquidity from gold. I just don't see that. Time will tell, though. Let's go ahead and take a look at the SPY. At the recording of this video here, the S&P 500 is near the top end of the trading range on lower volume. That is a bearish divergence. So following the process that my team has, this would be a good time to continue to sell some into that. So yeah, that's what we're seeing there, similar to Qs. And hold on one second. Sorry about that. Had someone calling my phone. My buddy, I'll give him a call back in a little bit here. But yeah, taking a look at things that are having a bounce, you also have Amazon that's in bearish trend, having a bounce here to the top end of the trading range. Let's see. Same thing with Meta. Meta's in bearish trend, and it's also at the top end of the trading range. So I think that all we're seeing is essentially these bearish trends just having a bounce, right? An overextension in both ways. That's pretty much what we're seeing today. Google provided a little bit of a shot near the low end of the trading range. Man, that got scooped up quick. Look at that. Check out that candle there. It didn't get quite down to the low end of the trading range, but pretty close. Let's see if we put a marker there. Take the thing off. Let's go to the 30-minute. How close did it get? Pretty close. Pretty close, I'd say. .92 basis points. Could be better. I'm still trying to mess with the ranges a little bit to get it more accurate on some of these things, but they work great for the most part. It'll be a forever project. Yeah. Okay. Yeah. Interesting here. Taking a look at the discretionary versus staples ratio, you can see that, yeah, you had a decent sell-off in this ratio. Now you're just having a pop. So things that are down just went up. Things that were up went down. And there's not really any break in trends here. So, yeah, that's all I'm seeing. Let's see. The dollar still remains in a firm bullish trend there, making another higher low, and it's continuing up from there. Bond yields continue lower, and the yield curve continues to flatten, bull flatten specifically, signaling that there's more headwinds with the economy, more evidence of the bond market signaling an economic slowdown. Let's see what else here. We already talked about the 5-year break-even inflation. Let me just bring that chart up just by itself, just so you guys can see what I'm talking about here. Okay, yeah, I'm on the daily time frame. So yeah, this has had a pretty stark drop off here from where we were at the middle of September, when the 5-year break-even was around 2.46, and now it's down, nearly 26 basis points. That's a pretty decent drop off, This is essentially signaling that, we could start to see inflation or disinflation accelerate in the next coming months heading into 2026. And it depends on what growth is doing at the same time. If growth and inflation are both crashing, that's not great. You'll definitely get lower rates, but that will be because the Fed is responding to a negative catalyst. Taking a look at the volatility index of the S&P 500, the VIX, that actually went neutral in our model today from bullish. So that's actually a positive rate of change for the main index there. Let's see, natural gas having a bit of a pop. Shippers having a bit of a pop. Let's see, I think that's really it. Yeah, I'm basically just seeing all the things that have been going up harshly for a while have just had a big correction. Silver miners, gold miners. Yeah, gold miners might be breaking trend here to neutral. Let me see here. Maybe not, actually. I definitely don't like seeing the accelerating volume on that. So, I mean, yeah, when it comes to gold miners, I'm probably waiting and watching. When it comes to gold and silver miners, I'm probably going to wait and watch to see what happens here. But when it comes to the underlying, yeah, I just bought a little bit more today for gold. So we'll see what happens. Could be wrong. This could be an actual liquidity shift into Bitcoin. But again, I think it's just too early to tell. All right, let's go ahead and take a look at some of the comments here first, starting with Matt Grace. Would you be buying gold and silver dips, or are you waiting to see what happens over the next few days? Already answered that. I know you don't call bottoms, but asking what your model says. Yeah, I mean, the model still says bullish on gold as well as silver. So silver is a lot more volatile. So I'll probably wait a little bit on silver as well as gold and silver miners. But when it comes to gold, I did take a shot of it today. We'll see what happens. We'll see what happens tomorrow. Did WGMI hit the low end of the trading range in your model? I think it did, actually, or I got pretty close. Yeah, not quite there. So I had some buddies who were waiting and who were texting me about. We have a little group chat, but yeah, I was just saying I was going to wait and watch a little bit more. Good question, though. Good question. Let's take a look at some of the chats on Instagram here. Will gold continue its run? I mean, it's still bullish, so it has a higher probability of continuing than not. Hi, Johnny. Thoughts on GDX? Gold miners waiting and watching. Appreciate the follow. I can't pronounce your username there, but I appreciate the follow. What is better, gold or silver? Well, again, when comparing to, we'll just do a little bit of an exercise here. So someone asked, what's better, gold or silver? So what's the first thing that I want to look at? What are the correlations, right? So I just go to my nifty correlations table here. Let's pull up silver. And this is on a 30-day rolling correlation. So at the timing of this video, is this on the 30? Yeah. So at the timing of this video, gold and silver have pretty much a 1-to-1 correlation. So that's pretty positive, right? So if you own silver, you're essentially owning a higher beta gold position. Let's see. Let's go to the 15-day, see it more on a smaller time frame. Still on a higher time frame, it's pretty much positively correlated there. So yeah, gold and silver, very much positively correlated. Both are in a bullish trend. On their individual pricing goes, let's take a look at silver. Silver versus gold ratio. So, taking a look at this, silver is in a better bullish trend, or silver is bullish when compared to gold. So, yeah, I mean, silver would, just by looking at the trend here, would be a better option if you're trying to look for more juice. If you're someone who's okay with just owning gold and you're not really trying to look for more volatility, then you could have some gold. You can own a tiny bit of silver, and both would be good. Both would be good there. But if I'm just answering the question, silver is technically in a bullish trend versus gold. So that's kind of my process whenever I'm comparing two things. Now, this correlation model here is one of the many exclusive indicators that we've created that are for our partnership circle members. And if you want access to indicators like this, as well as our trading range indicator, so that you can have the ranges on demand for whatever asset you want to look at, stocks, crypto, whatever, you can actually gain free access in our 6-week macro mastery challenge that's going on right now. All you have to do is just go to the link in the description below. For those who are on Instagram or who are on TikTok, you can just go to the link in my bio and click there where you can book a strategy session with myself, right? It's not like anyone on my team, it's with me. And we can kind of just go through what the 6-week challenge entails, as well as kind of just review, your current process and, what the bottlenecks are and, see how we can help you with those. So, yeah, that's what's going on right now. So if you want access to that, just click the links in the things. But that's pretty much all I have for you guys. Just a quick recap with what the futures market is pricing in for the target rate probabilities. Right now, the futures market has the Fed cutting 3 times between now and the end of January. So by February 1st of 2026, the Fed would have cut by 75 basis points. After that, the futures market says that the Fed is going to pause until June. We'll see if that happens. Obviously, things can change, but that's what the market is currently. That's what the market is currently pricing in right now. So, in terms of inflation, it still has the October and September report remaining close to 3% for headline CPI, but we like to look ahead of that, and we see that inflation is set to come down for the months of November and December, as well as the months heading into 2026. So even though we'll probably see, if we do get them whenever the government reopens, we'll probably get a couple numbers that remain at 3%, but after that, we should be seeing some disinflation happen. Ricardo asks, are you positioned for high beta? I was selling some yesterday at all-time highs, was able to buy some back incrementally today. I mean, in some things, yeah. I'm not heavily, I'm a pretty conservative, positioner. So, all right, let's go ahead and take a look at some of the TikTok comments. I know these comments sometimes I don't get to right away, so appreciate the patience there. I think markets are a little hesitant due to the government shutdown. I don't think so. I think the government shutdown is pretty much a nothing burger. Appreciate the shares. Thanks for the likes. Helps the algorithm there. Let's see. Gold had a massive sell-off. That's not bullish. Well, it still held its bullish trend. So I mean, the thing has been going up for, up in a straight line for the past like, you know, 6 or 7 weeks. So of course you're going to have a pullback. The trend is about to change for gold. It might. It hasn't changed yet in our model, so I'm going to change when our model changes. I don't just, you know, just because there's one sell-off doesn't mean that, it automatically goes bearish. That's why understanding technical analysis and price action trumps everything else. Well, it depends. I mean, if you're just looking at, price levels, that's not really technical analysis. That's just lines on a chart. A lot of people like to look at some of the, you know, technical indicators that you learn after your first 10 minutes of YouTubing what TA is, things like the RSI, stochastic RSI, that sort of thing. And, those are great momentum indicators, but they're single factor, right? They're not incorporating, things like volume at all. So, you can get taken by surprise if you're only looking at momentum-based technical indicators. So I'd just be careful with doing that. Are you selling a course? Well, we sell a publication that has our research as well as what we recommend given the macro environment as it relates to what our model is suggesting, right? So there is some training modules in there, but it's not like a course, right? It's more so just showing people what our model does so that they can replicate it themselves. And yeah, so I mean, there are training modules in there, but it's not just like that. That's a very small part of it. It's mostly, seeing what we're doing in there every single day with our research and our positioning. But yeah, that's in our macro investing community. Hey, Johnny, ISRG just reported earnings. I don't know what that company is. Intuitive Surgical? I'm unfamiliar. Definitely in a bearish trend though, so looks like a good short opportunity right now if I'm just looking at my ranges and my model. But yeah, I don't know anything about this company. Oh, I see the post earnings bump there. Yeah, I mean, if it opens up tomorrow at this price level, then it would definitely it would definitely be in bullish trend. I didn't even see the post earnings price there. Yeah, I mean, after this, if it closes above there, really it just has to close above like 482. So tomorrow, if it's able to have some normal price action at normal volume and it closes above that, then it would probably go bullish in our model. What do you think about quantum computing? A lot of those quantum computing stocks still remain in bullish trend. So IonQ, yep. I mean, a lot of them just had a decent, sell off the past few days. So, I mean, they still remain in bullish trend though. We'll see what happens. But I think those will continue to do well. All right, everyone. Well, it's 4:15. We're going to go ahead and wrap it up there. I appreciate everyone for joining. As always, I appreciate you guys, liking the video, sharing it, as well as if you guys want to join our partnership circle and gain access to that, we have our 6-week challenge, which again, you can access using the link below to schedule a time with me to review all of that information. But appreciate everyone for joining. Have a great rest of your evening, and we will catch you in tomorrow's daily macro update. Bye, everyone.